Welcome back, guys. In this video, I'm going to discuss something that all of us hate, which is drawdown. Now, drawdown is a part of trading, but if we can implement in our trading plan a way to avoid drawdown, why wouldn't we? And that's exactly what I'm going to talk about in this video, is how to avoid drawdown as much as possible in your trade. Because most of my trades, there's very minimal drawdown because I like to get from point A to point B as fast as possible, but I've developed a system to avoid drawdown as much as possible. So I want to share that with you guys today. So if that video sounds interesting, definitely do stick around. And if we could do the YouTube business is simply leaving a like, subscribe, all of that stuff, you know the drill. And down below is my official Instagram link, so you can follow me there for updates and stuff, and you can join the free Discord and all of that good stuff. So all my official links down below, check that out. And that being said, let's get on to the chart. So see you there. Alright guys, so we're here on the charts and gonna explain how we're gonna avoid drawdown here. Now, obviously drawdown is not always avoidable, it's gonna be part of trading, but I can show you a few examples here of how we avoid drawdown most of the time. Most of the time my entries have very little drawdown. I can show you here on the stream journal. So this is the journal that I track the trades that we take on stream and the trades I take myself in London session. Here you can see all the links. You can watch back the trades to see it yourself. Here's a few recent trades. As you can see, very minimal drawdown. This is maybe around 1 to 2 pip drawdown here. This entry here, again, very minimal drawdown. This is maybe 2 pip drawdown. And then this one here as well, basically no drawdown. And these are entries that we always take, and you can see how that is effective. So in this video, I'm going to talk about the main points here, probably 3 to 4 points it's going to be of how to avoid drawdown. Make sure that you stick towards the end to get to the juicy points. I'm also going to show you a representation of like a real life example so that you guys can see exactly how it will play out and what to look for. So point number 1 is going to be trading during volume times. Now, this is something that people miss out. I'm going to tell you the exact hack, the exact times to be trading to be sure that you get the best pushes, because you're going to hold drawdown if price is ranging. If price is ranging, you're going to hold drawdown. You're going to hold drawdown if price is ranging, but you want to be involved in these nice quick pushes, right? You're going to hold drawdown here if you get stuck in stuff like that. So the way to avoid drawdown is going to be trading in the volume time. So for London session, it's going to be 1 hour before London open to around 1 hour after London open. For New York session, it's going to be at New York open to around 1 hour after NYSE. Anywhere in between there, those are your prime times to be taking trades, right? So if you're trading during those times, that's where you're going to most likely avoid the most drawdown, because we're going to have volume. Now, in those times, you need your setup. So that leads me to the next point, which is going to be having entry setups. You can't just randomly trade and expect no drawdown. You have to have an effective setup that is back tested, has that approved on that. Now, the good thing is I have already done that for you. And we do have videos on my channel about your setups here. So this is my top 3 price action setups. You can watch that, learn the setups I use, and those setups are naturally going to avoid drawdown. Why do they avoid drawdown? Is because they follow momentum, they follow bias, and they follow trend. So if you're not using my setups, because I understand people who watch this video might just trade differently or trade differently in price action, you must remember that you have to follow trend, momentum, and basically bias. So I have videos on my channel talking about bias, your session bias, what direction makes sense in the session, because New York could be, London could be moving up, but New York could end up moving down based on what happened during London. That can all bleed into each other, and what could end up happening is you just get confused and look for the wrong direction, which is why it's very important to have bias set out and be following trend. Because the simple way to put it for you guys to understand is something like this. Let's say you are a buyer in this market here. It is a lot easier to find buys and make profit out of buys in a market like this than trying to catch the pullbacks. Not only in the pullbacks are you more likely to hold drawdown, you're also more likely to lose the trade, right? Because when momentum is moving up here, we want to be with that momentum to avoid drawdown, because when momentum is pushing, it's unlikely that it's going to pull back. So that's going to drastically avoid your drawdown and get those so-called sniper entries. Now, sniper entries I don't believe in, such as, calling bottoms and calling tops. I think that's career-ending moves. Wait for confirmation from the bottoms and confirmation from the tops. That's a lot more effective way to be taking trades, right? So now we can get more into the juicier stuff, and the next point that is going to drastically change your drawdown is, before you take an entry, wait for structure. So what do I mean for structure? How are we going to define structure? So let's go ahead and look at this, remove this line as well. What I mean by structure is that what we need is, let's say we're looking for buys. This candle rips and closes above the range. That's not enough for me to take buys because the next candle could pull back if we've been having a big push up here. So what I want to see is I want to see candles pull back, create that structure for me, and then we can get and close above. Now we have structure here. Guess what happens? That's our pullback zone. Now, since we've done the pullback already, it's unlikely that we do the pullback one more time, right? So what ends up happening is that we end up in a situation where the pullback has happened. Probably on when we take the trade, we're not going to hold as much drawdown, or if any, because the pullback has been done. So we can go and see, like, we can even use the examples of this. Look at this, pullback done before, then entry taken, right? You hold minimal drawdown. Here, pullback done before, then entry taken, minimal drawdown, right? Since the pullback happened, we don't really expect it to pull back again. And you can see it does pull back, but what happens? It pulls back at a certain BE point, and that's why we go BE there, because it was a resistance. But you can see the pullback happens above our entry, which we don't care because we don't want to hold drawdown. Pullbacks above entries, it's fine. We're in a safe position. We can make decisions. Again, here, this one pullback happened here. Look at this, is structure formed. Now, structure can be formed either with 2 candle pullbacks or 1 candle pullback. 2 candle pullbacks always stronger than a 1 candle pullback, but in high volume times, 1 candle pullback's enough. So waiting for structure is going to drastically change your trading. Now we could talk about exactly how to use structure in your trading. That's a whole separate topic, but we can go ahead and look at an example of how waiting for structure could be useful. Let's look at something like this. So obviously here you can see breaking above this range is probably where we want to buy with clean candles. That pullback that happened first avoids you, right? Because since the pullback happened, when it closes above, that's where you can look for your buys. If you're buying up here with no pullbacks, look what happens. It pulls back even though you were correct with buys continuing up. Okay, let's say you're looking for buys and you end up being correct. You had to hold all this drawdown. Why did you have all this drawdown? Because you didn't wait for the pullback first. So that could potentially be drawdown, or even at worst stop you out, right? Which is why it's good to wait for pullbacks first, because then you can avoid that type of drawdown. Now again, you need to have entry setups that are valid as well. So the next point I'm going to talk about here, before I show you all of this put together and how powerful it is to avoid drawdown, is we're going to look at basically the candles itself. And this is a point that I see a lot of people miss out on, which is waiting for the candle to have a top or bottom wick. If you're a buyer, you need the next candle to open, make a bottom wick, enter you into your buy. Your seller looking for the next candle to open, make its top wick, and enter into a sell. Reason being is that 90% of candles, if not more, have bottom and top wicks, or make bottom and top wicks at some point. So that bottom and top wick can put you in drawdown. So not waiting for it, you're asking yourself to be put in drawdown. And even on top of that, and I'll tell you from backtesting and from the way I trade, candles with no top wicks, no bottom wicks are going to give you way lower probabilities to win your trade. And actually the example we're just looking at had a perfect example of how that actually could play out. So if we rewind here and look at some example like this, this candle closed just above this resistance here. This looks great. You're like, wow, liquidity grab towards the downside. We start to break up here. I'm going to take a buy. Boom, you rip buy on the candle close and you get this. Boom. For a fact, we know that this candle did not end up going up first because it's opened with no top wick. So both ways, if you just rip buy, now you would be stuck. Not only would you have held all this drawdown, you probably would have lost if you're keeping your stop loss below this candle here. If you waited for the bottom wick and then for it to flip up, you would not only avoid all of this and a potential loss, you will avoid the drawdown that would happen and then flip up and have higher percent chance that price just starts to continue up bullish, right? And that's exactly what we want, right? We don't want to be holding through all of that pullback. We want to be efficient and get in the efficient move, and that's going to drastically avoid your drawdown. So now that we've learned all of this and all of these points that you guys can now easily implement into your own trading, I'm going to show you basically how a real life example would play out here, candle by candle. So let's go have a look at that. All right, so I'm going to show you this example using our backtesting software that we made, this web-based backtesting software, Pip Labs. This is a great tool and I'm happy I can use this in the videos because we can simulate and show how it would be. So today, momentum towards the upside, looking for buys. And we would be looking for buys again during a volume time. So getting close to New York Open, we're in London now. So getting close to New York Open where we'd be looking for the buys. This is an example of a bad buy that you're likely to hold drawdown on. Not only, this is going to prove, all of the things together. You are now after London Open, 2 hours after London Open, well, an hour and a half after London Open, right? So remember the volume time. Not only that, there's no pullbacks or structure, but you do have valid area to trade in, right? So you can see this is a valid area to trade in. You do have a close above this range here to go and fill some of this range. But what's not valid is the time you're trading, and also there's no pullbacks to enter the trade. So we're going to skip candles and we're going to wait for all of those conditions. So we know we have trading zone. We know we can take buys in here, but now we need to find the conditions in order to get the accurate entry or the sniper entry, whatever you want to call it. So candle pushes up here, did have a bottom wick, right? So what happens? Boom. Now the pullback comes. So that's the first step. Good for us. That's the pullback we want. Now we need something to close above, right? That's the next step. We need something to close above resistance as we come close to that volume time. And look at this. Now we're coming. As soon as we hit 16 o'clock, that's going to be New York Open here. And boom, we hit New York Open. So now we have the volume time. Now we have the pullback. We just need to close above. And let's see if we can get that. So if we keep skipping, we're in New York Open now, coming close to NYSE Open. So even a better volume time. And boom, around NYSE. Yeah, exactly. New York Stock Exchange Open. We get the close above here. In our zone, we've had a pullback, and now we can look to simulate the trade, right? So we would say we would enter break of high, but what do we need? We need the bottom wick, right? Target somewhere up here, something like that. All right, we can press confirm here. So what do we need? We need a bottom wick here. We need a bottom wick, all right? And that's important. So here's your bottom wick. That's avoiding drawdown. If you just press buy, now you're sitting in this drawdown here. You're sitting in maybe, I don't know how much now, 5-6 pip drawdown. If it came here, you're sitting in 10 pip drawdown. So you avoid all of this drawdown here, right? So this is drawdown we're avoiding. So we just avoided that drawdown. If it breaks the high, we would be entered into the trade. We can speed this up to save some time. And this drawdown you avoided, right? So that's around 8 pip drawdown you just avoided. And boom, you get entered into the trade. Candle starts ripping up here. You're not even 1 pip of drawdown you saw. Literally straight into profits here. And you're not even worrying. Now if price pulls back and wants to create structure, it's fine. You're in profits. These pullbacks you're not worried about. You're sitting in profits. You're not sitting in drawdown worrying if you'll even see profits. That's a massive difference in your trade and a massive way to be looking at trading, because you're going to have so much control over your own trade. So you can just sit there and relax and let, probabilities do the work, but you waited for that accurate entry, and that's very rewarding because we put it all together and you get everything put together, right? And then, yeah, that just went and hit TP there, and that's exactly it. So this is a very useful tool because I can play tick by tick. On TradingView, of course, I can only skip candles, but I could show you exactly how the bottom wick was formed, how it entered, how it looked in real life. And it's a simulation, right? It's simulation practice. Practice your simulating of your trades. And you can practice your strategies and stuff like this. You can try this for yourself. The link is in my description. You can try the demo mode, apply the concepts. You don't have to wait for the real market. You can practice it here and, test what I was telling you about, right? So that's the beauty of this. And of course, practice your own trading. So you guys can check that out, but it's very useful tool for me to show you. And I think it will help a lot of you. So let me know in the description below if it has helped a lot of you. Me showing you an example like this. I think it's a lot more accurate for me to show you a real life example like this. So let me know in the comments if you enjoyed that. I hope you guys did enjoy the video and found something useful. If you did, always feel free to leave a like or subscribe. With that being said, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.